So this article right here will talk more about the United States and their legalization process versus the Canadian process, since right now in Canada, we are 100% legal in a federal level. In the US, we're still dealing with each state making their own laws. So it's pretty much up to each state whether they want to legalize it for recreational purposes or for medical purposes or for both, or whether they want to keep it completely illegal, which has made it a very difficult process, especially for the United States, especially because the US is such a huge market. So this is definitely a negative, and this is definitely something that has been slowing down the whole sector. So this year has began with Illinois starting to sell recreational MJ from January 2nd after discussing the pros and cons of recreational usage. So the Illinois House of Senate voted in favor of legalizing MJ on May 31st, 2019. With this, Illinois became the 10th state in the United States to legalize the adult use of CBD products. Observers of the MJ industry expect the momentum from 2019 to continue in 2020. However, after a banner year, many experts may believe that MJ may be headed for a dead end in 2020. They believe that Capitol Hill might want to avoid legalizing MJ at the federal level, at least till the end of this year, owing to the presidential election in November and President Trump's impeachment trial. So is federal level MJ legalization possible in 2020? So while Trump has maintained his stand on the opposition of federal legalization of MJ, he has allowed the states to individually decide on legalizing MJ. A poll from a research center reported that approximately 55% of the Republicans supported MJ legalization. In fact, Bernie Sanders had earlier promised that the next president would take executive action to make MJ federally legal. So to conclude, increasing tolerance, financial protection, credit availability, and legal votes have shaped America's hemp industry lately. Such development has more to do with growing awareness of its commercial and medical values, establishment of stores which sell recreational MJ in the East Coast would go a long way in establishing a firm footing for the space. Moreover, recreational legalization of MJ is expected to be on the ballot in 2020 in states like Arizona, Arkansas, Missouri, Montana, New Jersey, North Dakota, Oklahoma, and South Dakota. Further demand of the novelty CBD products have been on the rise over the past few years. Cowen estimates that the MJ market in the United States will grow to $16 billion by 2025. Investors have a lot to look forward to America's MJ industry in 2020. Yes, we have a lot to look forward to, but nothing is guaranteed. Especially right now, we're dealing with a lot of things in 2020, a lot of unexpected things. For example, we did mention in this article, Donald Trump still has to go through his impeachment trial. On top of that, we do have the election, so it kind of would be a tricky situation to legalize it mid-elections. On top of that, we do have this coronavirus. I know it has nothing to do with the MJ sector, but I feel like this is a distraction, and it kind of does slow down the whole process, because instead of worrying about a sector, we're kind of worrying about people's health. We're kind of worrying about something else. Our minds are elsewhere, and politicians' minds are elsewhere, which in my mind, I would imagine this would slow things down for the growth of this sector. So now we're going to move on to the next article, which is that MJ retail sales have fallen for the third month in a row. And this is kind of a negative article, and I'm not trying to be a bear. I'm heavily invested in the MJ sector, so I'm not here to give you guys bad news. I'm not here to tell you guys or to scare you guys. I'm just here giving you guys a full perspective of the sector, so you guys can make your own decision whether you guys want to invest into it, whether you think it's safe. But also remember, all this negative news also brings the share prices of a lot of these companies down, which could potentially create a buying opportunity. I'm sure all of you guys have heard the saying, be fearful when those are greedy and be greedy when those are fearful. Right now, a lot of people are in fear of this sector, and there's not a lot of confidence, and like some people would say, there's blood on the streets. So a lot of people could be looking at this as a perfect buying opportunity, because there's a lot of negative media coming around right now. All these companies are near their 52-week lows, so this could potentially be creating a great buying opportunity. So I'm not here to scare you. I'm just here to give you guys the news. So total retail sales of MJ-based products in the 5 largest legal U.S. markets, Arizona, California, Colorado, Oregon, and Nevada, totaled to $572 million in November. That figure is down 1.6% from October and marks the third straight month in which sales have declined. So what does this cannabis report say? The reports also show that the average retail prices have fallen approximately 2% on a year-over-year basis, though total sales are up over 15%. The slowing sales are in line with what has been an overall downtrend in the industry. But on the positive note, the index does show a positive price trend in pre-rolled joints and topicals on year-over-year basis, while flower, vapes, ingestibles, and dabbables concentrates continue experiencing negative price pressures due to lower sales. The slowing sales are in line with what has been an overall downtrend in the industry. Though MJ continues to make headway on the legalization and regulatory fronts, many MJ stocks ended 2019 in full correction territory. In private markets, a slowdown in deal making has led to a capital crunch for some companies. So unfortunately, the bad news does not end there. Here we have an article titled ACB Stock Bearish Due to High Balance Sheet Stress, which we have talked about in the past. So one of the primary reasons for downgrading ACB stock has been the pressure on the balance sheet. For the first quarter of fiscal year 2020, Aurora has reported cash and equivalent of 153 million Canadian. For the same quarter, the cash used in operations was 95 million Canadian. If cash burn sustains at the same rate, Aurora will need additional equity or debt funding in the second half of 2020. That seems very likely, and the stock is discounting dilution or leveraging concerns, among others. There are two major potential negative triggers. First, the year 2020 is likely to see high marketing and selling expenses. The company is rolling out Cannabis 2.0 products, including gummies, chocolates, baked goods, and mints. With higher marketing expenses, ACB will burn cash faster and dilution is likely sooner. Second, if Cannabis 2.0 products fail to gain traction, ACB stock will trend lower. The company is relying on recreational cannabis to trigger growth in the medium term. Medical cannabis is unlikely to be a growth trigger since clinical research and regulatory approval will take time. What they mean by medical cannabis is unlikely to be a growth trigger is that when you're doing studies on medical cannabis, whether it's for cancer, whether it's for pain, epilepsy, anxiety, etc., all these studies take time and they're very risky. You can't just do a quick study and then automatically release a product and say it does this, because if you end up being incorrect, this could cause an even bigger problem for Aurora, and you don't want to do that, especially when it comes to the medical side of this business. So there's no shortcuts to inroads for the medical cannabis segment. Progress will be slow and the markets have been discounting this factor. Aurora is working on a clinical research related to pain, epilepsy, PTSD, anxiety, opioids, cancer, etc. If results are positive in the coming years, medical cannabis will gain traction, but investment in clinical trials and research and development will involve sustained cash burn. Another problem with Aurora is we do have a setback in Europe. In November 2019, Aurora products were suspended from Germany until further notice. The German authorities are investigating the methods used by Aurora to increase the shelf life of cannabis. Important points to note is that German cannabis is expected to be a 9.4 billion industry by 2028. Therefore, this is a big setback for a high potential market. Another one is in November 2019, Italy canceled one of the 3 lots of cannabis supplied by Aurora. That given reason was a non-compliance with the European Union Good Manufacturing Practice Standards. These incidents could impact growth and regulatory hurdles are a major headwind. So the bottom line on ACB stock, ACB has been battered in 2019. I don't see any respite in 2020. Cash burn remains a big challenge. And additionally, I believe that slow growth in medical cannabis segment will affect stock sentiment. The industry is still at a stage where R&D and marketing expenses are set to remain high in the coming years. Therefore, equity dilution or leveraging is likely in 2020 and can further depress ACB stock. Overall, it makes sense to stay away from ACB even after the big decline of 2019. As of writing this, Faisal Humayun did not hold a position in ACB. So there you go. Once again, I'm going to mention I am not a bear on this company. I am not against the MJ sector. I actually believe in this sector, especially in the long term. But I'm kind of just releasing this video just to show you guys, like, there's still a lot of negative news surrounding this company. Just because the company has dropped 90%, does not mean that this decline is over. But also, just because I'm dropping this video does not mean that Aurora will continue to decline. I'm just here to show you that this sector will probably continue to be volatile for the next year, maybe the next couple years, and it will take time for you investors to probably start seeing some real growth in this company, mostly because there's a lot of obstacles, a lot of hurdles ahead, not just for Aurora but for all these companies. So my conclusion is just invest wisely. Always invest what you are willing to lose. I would personally never invest more than 10% of your portfolio into one company, into one sector. Just know that there's a lot of high risk involved, especially investing in a company like Aurora, and there's also so much potential. I won't be surprised that one day from now, maybe 10 years down the road, this company is worth 10, 20, 30, 40, $50 a share. And I also won't be surprised within the next year if Aurora goes down to $1. It just shows the volatility of this whole sector, which is the reason why I have always collected profits when I've seen them. This is a very volatile sector. From one day we might see a 20% gain, and the next day we might see a 30% loss, which is why I have always bought in the red and I've always tried to sell in the green. I've maintained a core position, which I've learned to average down, and then for my rest of my position I pretty much have bought and sold based on the amount of profits that I've made. So there's a lot of negatives surrounding this company right now, one of them being debt. Another one, Aurora Products was suspended in Germany in 2019. Italy also canceled one of the 3 lots for Aurora. And then of course all those negative analysts that have given Aurora $1 or $0 price targets. Those are the few negatives we can look at, but then there's also positives. One of them is Cannabis 2.0 is coming up. No, it's not a guarantee that this will drive the sector up, but yes, there's a lot of potential to make a lot of money and to increase revenues and possibly start making some profit thanks to Cannabis 2.0. Another positive that we could potentially be seeing this year is Nelson Peltz. Maybe it is his year, his time to finally make a big move and help this company out. Some more positive signs is we're finally starting to see Aurora be a little more conservative with their money. They're no longer overspending, trying to grow too big, too fast. You're seeing them stopping construction in certain facilities. They've already sold another facility. You could see them being a little more smarter with their money, and they're not just throwing money out there trying to grow as big and as fast as possible because they expected this whole thing to blow up. But now they're being a little more conservative, which I do think is a positive thing, because that will mean that they're spending less money, and hopefully they stop diluting more shares, because that could be another potential thing that could be happening in 2020. So overall, with all these positives and all these negatives, I leave the decision to you. What are you going to do with Aurora? Are you guys still thinking of purchasing more Aurora shares? Do you guys have a specific price that you're looking for before you can jump in this company, or are you guys cutting your losses and getting rid of all your Aurora shares? Let me know in the comment section. Are you guys bearish or bullish on Aurora? If you guys enjoyed this video, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button, and I'll see you guys on my next video. Bye bye.